Welcome to the Cryptosphere. This is Cryptogenic coming at you. Today is Thursday, May 13th at 4:53 p.m. here in sunny California, and we are finishing off a daily candle here. 6 minutes and 26 seconds left on this daily candle. By the time I'm done with this video, we will have a new daily candle, and that is significant, and I will tell you why. The reason this is significant is because this candle here is called a doji. A doji has a long bottom wick and a long top wick. And what a doji signifies is indecisiveness in the market. A doji means that the market hasn't decided whether it's going to turn around and go up or whether it's going to press down. And so we're forming a doji candle here on the daily, which means that at least on the daily, the market is indecisive. The market doesn't know if this pullback is over or if it's going to continue a little while longer. Now, I want to go back here on this daily Bitcoin chart and show you something here. We've had multiple pullbacks here. If we just go back here to early January, we started the year with a pullback that went down 30.59%. We had another pullback here that went down 26%. We had another pullback here that went down 18.75%. We had just come out of another pullback here that went down 27%, and now we're having another pullback here that has taken us down so far 16%. So if this pullback is basically over, I mean, if we go to the bottom of this pullback, we went down actually as far as 23%, okay? So if this pullback is over, basically we've done here what we did in the last pullback, and that is test this trend line, break down beneath the 100-day EMA, and retest this trend line. It looks like, I mean, if you look at the daily candle here, yesterday's daily candle stopped exactly on this trend line, pretty much. And then today we've stayed above it. I mean, we wicked below it, but we stayed above it. The RSI has broken through the bottom. However, if we look at this chart on the 4-hour, let me tell you what concerns me. On the 4-hour, that looks to me like a bear pennant. So we could see this as the pole. And then there we've got basically the pennant, right? So if this is a bear pennant and we break bearish out of here, we're talking about another 10.5% drop. So let's say we break bearish out of here in the next 4-hour candle. That should take us down to somewhere around $43,000. Okay, 10.5%, something like that. Yeah, that should take us somewhere around the mid $43,000. Okay, so that's definitely possible. I'm not only seeing this kind of bear pennant formation here on the Bitcoin chart, I'm also seeing it here on the Litecoin. Whoops, sorry, I'll get to that in a second. I'm also seeing it here on the Litecoin chart. If we go to the 4-hour chart, you know, it looks to me like the same type of formation, similar. But then again, it looks like more like a descending. Could this be more of a descending wedge? I'm not sure. We'll have to see. Earlier to me, I was seeing it kind of like this, and it looked like we've already broken bearish out of it. And so if that's the case, then Litecoin should come down about another 10%. And from the place we broke bearish, if Litecoin comes another 10%, 10.95% to be exact. Of course, it's not an exact science. That should take us down to about 273. All right. Now, there's so many different ways to tell the story of Bitcoin. But one way to tell the story is by describing the relationship between Bitcoin's price action and the 21-day EMA on the weekly chart. Now, this was just shown to me by a member of my trading community, great guy Augusto from Argentina. Thank you for this, Augusto. One of his friends showed him this, and I thought it was so interesting, I wanted to share it with you. If you look at the weekly Bitcoin chart and you throw up a 21-day EMA, What's happening right now is we are testing that 21 EMA, and we actually wicked beneath it for a moment. Now the question is, when was the last time we tested the 21-day EMA on the weekly? We tested it here in September of 2020, okay? So end of August, and then in September, we tested the 21-day EMA. When was the last time we were beneath it? The last time we dropped beneath it was in February of 2020. Now look at this. This is crazy, all right? Everybody felt like, I don't know if you were around in the whole cryptocurrency community last year in March, but if you were, you know what this is. I mean, we need t-shirts. I survived this junk. 1 week, we saw a 52% drop. I mean, if we include the previous week, it was 57%, and the previous week, 61% in 3 weeks. It was a crazy turn of events. But we didn't feel it until we got to March. But what happened in February is we closed a weekly candle beneath this 21-day EMA. And the moment we closed that weekly candle beneath the 21-day EMA, boom, boom, it was super bearish after that. And so each time, I mean, we closed here below it and we were under it for a while. But most times we close beneath that, it is indicative of bearish things to come. Now, of course, right now, this EMA is still on an upward trajectory. And typically, if we close beneath it when it's still moving upward, that's a lot different than if we close beneath it when it starts to move downward. So this could be the beginning of a bearish move for Bitcoin. We simply need to watch the 21-day EMA. We've got 3 days left on this weekly candle. And so if we can stay above the 21-day EMA, Bitcoin can still turn this around and move towards another all-time high. But if not, we might be in trouble. But we shall see, folks. We shall see. Now I want to look at XRP for a second before I move on, because I did not look at XRP yesterday. But if we're looking at this XRP chart, macro is still bullish as all get out. I mean, if you look at the macro, the MACDs, the RSI, the price action, everything looks great on the macro. If we zoom in a little bit to the 3-day chart, we're still right in line with this triangle that we drew a while ago. But if I go down to the 4-hour chart, what are we seeing here? On the 4-hour chart, look at this. We're not seeing this on any other 4-hour. The MACDs look like they want to turn bullish. The RSI looks like it's trying to recover. And it doesn't look like any bear pennant. Well, we'll have to see. What is this formation? Just looks like a triangle here. Somewhat, almost a symmetrical triangle we're printing here. So the question is, how are we going to break out of this triangle? Or did we already break out of the triangle? It could be that we have broken bullish. Let me get rid of this here. Out of a triangle here in the short term. And if that is the case, then what XRP is fixing to do is increase by 16%. Okay. So that simply means that we could see XRP start moving up while the rest of the market still might need some time to move down. We shall see, but we're watching it. But either way, XRP is still in great shape. I don't see any problem here with this XRP chart. We're moving along nicely. All right, so the 3 assets in the Cryptogenic portfolio that I'm going to review today are MTV, TRX, and DGB. Let's start with Multivac. Folks, Multivac is hitting a moment of decision here. It's been in this triangle all the way over here since April 13th. And that's about the time we bought it. I think we bought it up here at near its all-time high. I can call this a cryptogenic blunder. But let's look at it and see what it's going to do. I mean, we are in the negative here. Those of you who bought this with me, I'm still holding it from my buy at 0.017. And so we are down 62%. The question is, are we going to get a bounce here? Or do we have further down to go? Well, we are gathered in the valley of decision with MTV at this moment because the RSI is coming into this triangle and it's got to make a decision whether it's going to break out bearish or is it going to break out bullish. Secondly, the price action is coming into the end of this triangle where it's got to make a decision whether it's going to break out bearish or if it's going to break out bullish, and it's going to make that decision pretty soon on both counts. Now, if we break out bearish, what does that scenario look like? Well, that could be really bad. I don't anticipate it being this extreme. I mean, I see lines of support here and here. But that's still pretty devastating. I mean, this is just par for the course in crypto, guys. Sometimes you win, sometimes you lose. But yeah, 65.68% loss would basically take us down almost to this line if we just move this up a little bit. Breaking bearish out of here could take us all the way down to 0.02 when we bought at 0.017. But if we get a bullish break out of here, where does that take us? Well, we could see a 190% rise. And so a bullish break could take us up to 2.1 cents. And so it'd be really nice to get a bullish break out of here. The only problem is that the MACDs are bearish as all get out. So to me, it seems that the odds are pretty good that we'll get a bearish break out of here. Am I selling my MTV? Nope. Not selling my MTV. Looks like there's another line of support here. So this line could stop us on the way down. Either way, you know what? When I make an investment in crypto, I buy a little bit. I only put in what I'm willing to lose, and then I wait. And if this junk turns around, it turns around. If not, that was the chance I took when I bought it. Those of you who bought it because I bought it, sorry about that. I don't like this, but hey, I just got to own it. I made the decision. I pulled the trigger, and this is the result on this one. Thankfully, when it comes to the cryptogenic portfolio, there is very few assets that we have a negative on. Most assets we have not only a positive, but a multi-100% positive. And TRX is one of those. We added it to the portfolio at 0.042. And it is now at 12 cents. So since we added Tron to the cryptogenic portfolio, we have made 194%. Not bad, not bad, not bad. So let's see what's happening with Tron. Well, I drew this trend line here, and then it seemed it was honoring another trend. It broke under that trend, so I think it's probably coming back to test its original trend, and it looks like it's not breaking beneath this. However, the MACDs have turned bearish. The RSI continues to honor this level of support, and so if it comes down and touches this line of support, that probably would correspond with the touch of this trend line here as well. And so if that's the case, then we should see Tron no less than 9.9 cents. Tron should stay. And if Tron does stay and we get a bounce, what I see for Tron, once Tron turns bullish, it could easily do something like this. Blah. and come up and test the top of this line here at around 30 cents. That would be really exciting to see, 30 to 40 cents actually. That would be really exciting to see. So let's keep watching Tron. Let's just make sure we don't break under this line here. If we do break under this line, it's going to get more bearish. We will see what happens. And then last but not least, DGB. I've been waiting on you, DGB. Come on, DGB. 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 Same thing with DGB here. Looks like we were breaking down under the line here, but it turned around and crawled back up into the trend. We are in the trend right now, which is a good thing. However, the MACDs are bearish, and if we look at the RSI, what are we seeing in the RSI? We just got to get above this line. We got to get above this line. If we can get above this line in the RSI, we're going to be fine. And once we do get above that line, let's see what we can project for Digibyte's future bullish move is to come back up and test the top of this line here. And so that would take us to, what would that take us to? That would take us to about 23 cents. Not bad, huh? Not bad, huh? And then once we get above that line, you know, it's going to be all heaven breaking loose in DGB. I still believe in DGB. I still believe it's going to break $1 this year. Looking forward to that. All right, folks, that's all I got for you tonight. Just a quick update and overview of where we are in the market. Have no fear. All is well. Just remember to sleep in peace, wake in joy, walk in love. Smash that like button. Smash that subscribe button. Leave me a comment. Check out the Cryptogenic portfolio. Check out the Cryptogenic community. Check me out at cryptogenic.io. And remember, this is not financial advice. I'm not a financial advisor. Everything I say is my opinion. Take it with a grain of salt. And with that being said, this is Cryptogenic signing out.